Finance Bro University's Passive Income Dream with High Yield ETFs Part 2. This episode is incredibly interesting. We are going to go in and understand exactly what the best ETFs to generate high yield, high income, that passive income dream. This is where we actually take a full approach and determine where we put our money. Finance Bro University is for the new paradigm in finance. We're going to master the old rules and then break them. So as I stated, we're going to find the best income ETF in the market, and we're going to leverage our previous work to define the true income and the categorization of ETFs that we saw in the market. We're going to survey all the relevant high yield ETFs and apply our true income formula to find the best, and then we're going to validate ETFs that we have selected. So if you're familiar with part one, we categorize ETFs into three buckets: full income focus, structured yield, and income oriented value investing, where generally you had a lower total return than your gross dividend with your full income focus, and with structured yield you had a yield that was in line with your total return, which represented that most of the return was income orientated and there was no real capital gains. And then we had our income orientated value investing, where they generated a small dividend but much of the return was made up in capital appreciation. Now, we're going to go and apply our true income formula to understand what is the best approach, which is the best ETF. If we truly want true income, we want to draw on it and we want to use that income in order to fund our lives, and we want to have passive income, want to retire. In the previous video, we defined true income, which is the true investment income derived net of any capital deterioration in capital, whether through NAV erosion, depreciation, plus necessary capital reinvestment, then accounting for monetary debasement, which is basically just true income is dividend plus capital growth minus monetary debasement, which means gross dividend plus capital growth is just your total return. That's usually what people talk about when you talk about ETF investments, your total return. And then we just factor in a monetary debasement because we have to overcome the rate at which money supply is being created. Otherwise, inflation's kind of eating our lunch. And we described how Schwab and Alti had very interesting outcomes, because Schwab did a 4% dividend, but when you took that formula, you got a 4.3% income from Schwab, whereas Alti, with a 91% dividend, when you accounted for this capital loss and the 8% monetary debasement, actually underperformed Schwab. Now, the point of this is not to tell you that I don't like Alti, and the point of it is not to tell you that I like Schwab. What I'm trying to tell you is that it's nuanced about which products are best, and you need to have a consistent approach. It's not just look at the gross dividend. That is not necessarily going to make you wealthy, especially if you're wearing a massive capital loss or erosion, right? So we want to isolate the marketing of like high yields to the true income and then understand what the best investment is. So here we have the result of all the ETFs that we analyzed in the previous video, ordered by highest true income to lowest true income, with the ones on the left generating a positive true income, whereas the ones on the right generating a negative true income. And what we want to do is analyze and structure this information to see what we can do with it and see what conclusions we can find. So bear with me while we do that. Here we have the structured data. Now, what we can do is we've categorized everything into something that we can use to analyze the market. Now, when we look at the top 5 performers, we can see that they make up FANG and Bitcoin orientated investments, right? We've got Misty, Nvidia, Coiny, which is Coinbase, Amazoni, which is a covered call Amazon, and FEPI, which is general FANG index covered call strategy. And they all have the highest true income at the moment, which is great. And then in the middle, we've got general market index. So that's QQQ. This is JEPQ, which is also the NASDAQ 100. So these are both NASDAQ 100 orientated. And we can see that they are generating okay true incomes in the range of 8%. So that means like probably 16% nominally, which you can see here. And then when we factor in that monetary debasement, we're generating 8% true income. So these represent high quality investments that are generating an income that you can draw on, and you're not going to get eaten away by monetary debasement. And these ones are your general market indexes. You know, Alti is kind of a NASDAQ 100-like sort of product. JEPI is a NASDAQ 100 product, and they're generating small positive investment returns, but you're not really going to survive off drawing 1 or 2% from these investments, right? So they're sort of underperforming from the purposes of what we need to generate passive income. And then, of course, we've got our negative passive income generating products. And the question we're going to go is like, are these an absolute no-go, or is there some form of redemption necessary, or is there some sort of a redemption available to them, right? Now, there are a couple. So to me, Tesla's have obviously been in the dumps lately. So obviously its covered call strategy is going to have a hard time. And, you know, I think if Tesla comes back, then this could certainly be a product that redeems itself. Again, another one, Fiat, which is a short Coney, or like a short Coinbase inverse. So, you know, that could do all right in a Bitcoin bear market. And of course, winter would do the same, right? And then, of course, we've got these yellow ones, which I think things that might benefit from like a lower interest rate environment, which might boost their returns up over time, but I'm sort of not super hopeful. And then, to me, the green doesn't necessarily indicate that they're a recommendation, but there's obviously certain market conditions where these products could do well. A Bitcoin bear market, you could see fiat do all right, and you could also see winter do all right if there was a Bitcoin bear market, right? So that's what we can see. We can see that the products that generate the most real income are FANG plus Bitcoin, which means that they're generating high amounts of capital return themselves, and the covered call strategy is able to convert that into income quite successfully. And I would say FEPI is a really interesting product from this. We're going to explore that a little bit more. So between making part 1 and part 2, I did get a couple of requests for some other ETF stickers. So ticker CII, BRW, FSCO, and these had true incomes of 2% to 0%. So nothing mind-blowing here, guys, like typical gross yields that you might look at and go, oh, they seem all right. But when factoring in total return, which means they have sort of average to negative capital growth, and then you factor in your monetary debasement, not looking like you're going anywhere anytime soon. So if you do have other requests, you do want to look at other tickers, do let me know. So in summary, our true income formula works a treat for understanding the best ETFs, and we can quickly isolate why they are high performing. Covered calls on Bitcoin and high performing stocks such as FANG have been the best bet lately. And FEPI, an interesting ETF which basically acts as a FANG index to generate that covered call income, is an interesting balance of providing that general market index with the FANG performance to generate income, and it will generate about 11 to 12% true income. So interesting product, and I think it may maintain that appreciation for now, and it will benefit from interest rates falling. Some of these other market index may do well converting capital into dividend, but direct exposure to that capital gain will likely be better performance over time as well. And a potential for a Bitcoin bear market would make products like Misty, Coiny, COYYY unattractive and potentially underperform, but also a Bitcoin bear market might be an opportunity for winter or fiat. So these things are things to keep in mind. Now, is there one stock to rule them all? I'd actually say FEPI is an interesting one that has that ability to incorporate those high-performing products over time and maintain that 11 to 12% real dividend income, and that makes it quite an interesting product. And if you're interested in Bitcoin and you can manage the up cycles and the down cycles, then playing with some of those other products, but making sure that you're not in them during the bear market will be key. About me, I have an economics, finance, and accounting and engineering background, 15 years in corporate finance and corporate strategy, and I've developed my own active approach to overcoming that 10 to 14% dividend income barrier. So if you want to learn more, check out my website, mangosteen.global. So come check out mangosteen.global and find out more about the Mangosteen Framework, which has helped me and my customers to navigate the Bitcoin market. Here we wore this down the bear market and we went bullish at the bottom, and we've risen this up, and we've recently exited our trade at 114K for a tidy profit. And now we're currently riding this bearish activity. So if you're interested in understanding how to generate income using Bitcoin and Bitcoin futures and options, come check out mangosteen.global. Heaps and heaps of opportunity here. I am biased, but I prefer my Mangosteen Framework. It's a Bitcoin-focused approach. Active strategy generate yields in the 30 to 80% range. Income is Bitcoin denominated, so it's true income, cannot be debased by inflation. Simple, bullish, bearish sort of approach. You don't have to be glued to your screen. We're making trades every 6 to 8 weeks. The recent trade I showed you just before was over like 6 months. And, come visit me at mangosteen.global, additional 5% discount when paid in Bitcoin, and of course a 14-day no questions asked refund policy, so you can come check it out, check out the videos, learn the framework, and if you decide it's not for you, then simply flick me an email and I will refund you. And of course, disclaimer, this channel does not provide financial advice or any advice of any kind. You must do your own research. Any investment or trading decisions you make are your own. This is entertainment only. You are listening to a random Mangosteen on the internet. Thanks for listening. I hope you enjoyed this Finance Bro episode. You can find me on X, YouTube, and my website, mangosteen.global. Come check me out. I've got some interesting ideas. If you have any questions, feel free to flick me in the comment section or flick me an email or hit me up on X. I will answer anything that you've got. Cheers. Thanks. Bye.